So I just got back from Ripple's annual Swell conference in New York last week, and the energy in the room told you everything you needed to know about where this industry is heading. They hosted it at Hudson Yards this year, which is right next to 50 Hudson, which is BlackRock's headquarters. And that choice didn't feel random. Maxwell Stein from BlackRock's digital assets team got on stage and said straight up that the market's ready for large-scale blockchain adoption. And he pointed right at Ripple's infrastructure as the rails that could move trillions of dollars on-chain. He went on to say that they've already tokenized fixed income, bonds, issued stablecoins, and that's where everything started. But this is really the rails for trillions of dollars in capital flows across all asset classes. And hearing that from someone in leadership at BlackRock really hits hard. For years, there's been a lot of people in the XRP and Ripple communities that have been saying the same thing. And now you've got Wall Street validating it. The attendance at Swell this year was packed. There was asset managers, venture firms, family offices, bankers. Everybody showed up to see what Ripple's been building and where the XRP ledger goes from here. And that's important because Ripple just closed a $500 million raise at a $40 billion valuation. And so just take a look at who invested. You got Fortress, Citadel Securities, Pantera Capital, Galaxy Digital, Brevin Howard, Marshall Wace, and of course me and Jake. But in all seriousness, these are big names to have on your cap table. So the question that everyone's asking is, why raise $500 million when you already hold $118 billion in assets? When you've got 3 times your valuation in assets, the answer's pretty clear. Ripple's starting to assemble the syndicate that's going to take them public. And so Ripple just locked in major Wall Street backing at wholesale prices. About a month ago, Brad Garlinghouse laid out the balance sheet for Ripple as of September 30th of 2025. And it showed $4.8 billion in cash, 40.1 billion XRP, 4.8 billion liquid, and 35.3 billion in escrow. And at the end of the quarter spot prices, that XRP was worth about $113 billion. And there was also 163.5 million fully diluted shares outstanding. And so when you add it all up, that's $118.9 billion in total assets. Yet the company's valued at $40 billion. That's roughly 0.35 times the NAV, or net asset value. If you stripped away all the operating businesses, payments, custody, prime, stablecoins, and just liquidated the XRP, you'd still end up with nearly 3 times that valuation. And some reports say that the $40 billion values Ripple at a 50% discount to its XRP holdings alone. Fortress, Citadel, and Galaxy basically bought XRP exposure at wholesale prices wrapped in equity. They got in at 0.35 the NAV, while XRP trades at full spot value every day. And now look at MicroStrategy. They've traded around 1.75 times the value of their Bitcoin holdings, and if Ripple traded at the same multiple, the valuation would be $198 billion. And if you apply a 3x multiple, which analysts often use for companies that own critical infrastructure and earn revenue on top of that, Ripple could be worth more than $1 trillion when XRP gets to $8.72, which values their XRP at $348.8 billion. Multiply that by 3 and you're over $1 trillion. And even if you think that's too aggressive, the gap between $40 billion and what those metrics suggest is pretty big. Ripple's not just sitting on XRP either. Their businesses are growing fast and they're generating real revenue. Ripple Payments alone has processed $95 billion in total transactions. And their RLUSD stablecoin just hit a $1 billion market cap in less than a year. And Hidden Road, which is now Ripple Prime, tripled its revenue run rate since acquisition. They're doing $60 million in daily transactions, and client collateral has doubled. And Ripple's doubled its live payments customer base quarter over quarter. They process over $5 trillion in annual payments and offer faster, cheaper settlements than a lot of other alternatives that are out there. And Brad has said that the goal is to capture about 14% of Swift's $150 trillion volume by 2030. That's $40 trillion a year. Even conservative take rates would make that business worth way more than $40 billion before even counting their XRP. And let's not forget that Ripple's been on an acquisition streak. They've had 6 deals in the last 2 years, with 2 of those over $1 billion each. $1.25 billion for Hidden Road gave them prime brokerage power, and $1 billion for GT Treasury closing in Q4 locks down the corporate treasury management market. Medico brought secure asset storage, Palisade strengthened custody infrastructure, and Rail expanded their stablecoin payment system. And so now they own the entire stack. They have payments, tokenization, custody, and companies with infrastructure like this usually trade at big premiums because once institutions plug in, switching becomes extremely expensive and painful. In Q3 of this year, Ripple shares traded right around $101 while the tender offer window was closed. Then they opened up a $1 billion tender at $250 a share on the same $40 billion valuation. And guess what? After it closed, secondary trades started coming in all above $200. There was a lot of holders that could have sold at $250, and they held on to it because they think it's worth a lot more. That tender offer had the lowest participation rate that Ripple's ever seen. And with ETFs, Franklin Templeton removed regulatory delay language from its S1 filing, which hints at a launch as soon as late 2025 or early 2026. They manage over $1.5 trillion globally. Bitwise and Canary Capital filed similar updates, and my guess is that Canary's ETF goes live first. And when those ETFs go live, XRP exposure is going to be as easy to buy as the S&P 500. There's institutional demand right now that's been waiting on the sidelines to move in on that. And there's a lot of analysts that agree that we'll see somewhere around $5 billion in inflows in the first few months. And based on the inflows to Canary Capital's HBAR ETF, I think it could be a lot higher. And that alone could lift XRP's spot price and inflate Ripple's balance sheet by billions of dollars. So what happens if, or when, XRP hits $5, $8, or $10? So at $5 XRP, Ripple's 40.1 billion tokens are worth about $200 billion. And if you had $4.8 billion in cash and they're growing businesses, you're looking at about a $250 billion company. And if you apply MicroStrategy's 1.75 multiple to that, that's $437 billion. Go 3x and it's $700 billion. At an $8 XRP, their holdings jump to $320 billion. At $10, it's $401 billion. And that's all before you add anything else. And Ripple's been buying back shares too. Over the past few years, they've repurchased more than 25% outstanding shares. In 2025 alone, they did $2.2 billion in tenders. They swapped retail holders for institutional names on their cap table, which attracts more talent, customers, and maybe even better treatment from regulators. That $500 million raise wasn't really about needing cash. It was more about locking in the names that can underwrite the IPO or direct listing and show regulators that Ripple's operating at institutional grade. And so it really creates a low reference point, so the eventual public price action feels kind of inevitable. And on top of all that, Ashish Birla, which is a former Ripple executive and board member, just raised over $1 billion for XRPN. That's the ticker for Evernorth, the XRP treasury company that'll trade on NASDAQ in early 2026. Ripple invested themselves alongside Pantera Capital, Kraken, SBI Holdings, and then Chris Larson and Brad Garlinghouse and David Schwartz signed on as advisors. That's huge because it makes a market for public comp and XRP exposure before Ripple ever goes public. And it provides institutional appetite and sets a price benchmark. With DATs or digital asset treasury companies on speculative tokens kind of falling out of vogue, makes a lot of sense that utility-based structures like what Evernorth is doing here make a lot of sense. And during her fireside chat at Swell, Monica Long, which is Ripple's president, said that there's no set IPO timeline. And Brad agreed, saying they'll slow acquisitions over the next year to focus on scaling the business. Now that the SEC case is over and it's officially established that XRP isn't a security in secondary sales, the regulatory fog's cleared. It's been difficult for regulated institutions to be able to be publicly involved with a company that's in open litigation with the SEC. And now we're starting to see regulations in the United States and around the world start to favor digital assets in a much better way every quarter. And back to the IPO discussion, let's remember that public markets bring a lot of pressure and reporting. By Ripple staying private a little while longer, it gives them more room to keep building long-term without chasing quarterly results. If anything, I think we might see a small secondary sale again to employees, but a full IPO probably comes a little bit later. The market as a whole needs to achieve a bit more stability, and Ripple's still got a lot of room to grow. They can add more banks, more remittance corridors, and more custody deals. And once digital asset treasury companies like Evernorth start to show XRP liquidity, Ripple Prime hits $10 billion in daily volume, and RLUSD crosses the $10 billion market cap, the outside pressure to go public is going to start building even more. And that's why I see $40 billion more like a price floor. A realistic valuation for me sits somewhere on $150 billion on the conservative side, and $350 billion if XRP rallies and operations scale. The $1 trillion scenario takes double-digit XRP and global dominance in settlement rails. That's not out of reach if we see tokenization and CBDCs start to go mainstream around the world. I think Ripple's likely going to wait until XRP ETFs prove liquidity and RLUSD shows it can compete with USDT and USDC. Then they'll probably announce a partnership with a top 5 global bank or a sovereign CBDC, and that's when they'll start to file for a direct listing. By then, we can expect that XRP will trade a lot higher than it is now, and the balance sheet starts to show $350 billion plus in assets. Ripple's portfolio of companies are bringing in $10 billion in revenue. That starts to get priced at $200-300 billion minimum. And let's not forget that Coinbase listed at $85 billion with only $1 billion in revenue. Ripple could list with 10 times the balance sheet and similar revenue at scale. These numbers sound kind of wild, especially if you've been around a while. But the real question is whether Ripple waits to go public at $200 billion or aim even higher at a $500 billion valuation. That $500 million raise at a $40 billion valuation was really about lining up the team that's going to take them public. And Fortress and Citadel wrote those checks because they see the same thing. Entry into a company that's going to redefine cross-border finance, custody, and tokenization. If you've been keeping an eye on institutional moves in crypto, Ripple just sent the clearest signal yet. The valuation gap is pretty absurd. The business momentum is definitely real, and the investors on the cap table are the same ones that underwrite massive IPOs. We've been at this a while, but I think that Ripple's just getting started.